welcome back to the Mindset, Market, and Money series. This is lesson 2 in our option swing trading series. If you're new here, my name is Amina, also known as the neurodivergent investor. And in the last video, we talked about what long-term swing trading is. Today, we're going to dive into the heart of it. How do we use fundamental analysis to find great trade? Don't worry, this isn't as intimidating as it sounds. I'm going to break it down in a way that's simple, clear, and easy to apply. And then you also have access to resources in the free Patreon group linked in the description bar below. Let's start with fundamental analysis. Fundamental analysis is about looking at a company's real business, its profits, growth, financial health, and industry to decide if it's a good investment. This is super important for long-term swing trades because we're holding positions for months and not minutes. We want to be confident that the business is strong and has room to grow. Let's talk about the 4 main things you want to check when you're doing fundamental analysis. The first one is growth. Is the company growing its revenue? Is money coming in? Is it growing its earnings? Are profits coming in? Are customers increasing? If the answer is yes, that's a great sign. The next thing we want to look at is profitability. What are the company's margins? Are they making more profit from each sale? Are they becoming more efficient over time? If their profits are going up while costs stay stable, that's a win. Next, we have the valuation. Is the stock cheaper or expensive compared to how fast it's growing? Look at these things like the PE ratio and the PEG ratio. Don't worry, you'll understand what that means. It's all in the homework if you check it out in the description bar below. Cheap doesn't always mean good, but a good company at a fair price is gold. And of course, you want to look at the balance sheet, which demonstrates or shows you the company's financial strength. How much debt do they have? Do they have a lot of cash? Can they survive a rough patch? Strong balance sheets mean less risk, especially in uncertain markets. Now, you don't need all the boxes checked, but if a company shows strong growth, healthy profits, reasonable valuation, and has cash in the bank, that's a solid foundation for a long-term options trade. You also want to look for catalysts. A catalyst is something that could cause the stock to move. Some examples are earnings reports, new product launches, acquisitions, industry changes, or even a new CEO. The idea is to get in before the move happens and hold long enough for the market to catch up. When swing trading with options, timing matters. You want to buy options that expire after the catalyst so your trade has enough time to play out. For example, if earnings are in 2 months, you might buy an option that expires in 4 to 6 months. This allows you to have some breathing room. Also, look at how the company makes money. Do they have subscriptions or one-time sales? Do they have pricing power? Are they the leader in their space? The better the business model, the more confidence you can have in the trade. Here's an example. Let's say Google stock dropped because of AI competition rumors, but the fundamentals still look strong. They have solid profits, they dominate the market share, and a recurring revenue model from ads and lots of cash. That could be a great long-term call option setup, especially if you think the fears are temporary. Don't forget to look at the bigger picture. Is the whole sector doing well? Are investors moving money into the space? Is there long-term demand for what the industry offers? When both the company and the industry are strong, that's where the magic happens. Okay, here's a quick recap of what we learned. Fundamental analysis helps you find strong companies with room to grow. Identify catalysts and match your options expiration to the timeline. Understand the business model and competitive edge. Analyze the industry and sector to get the full picture. And always analyze the industry and the sector to get the full picture. Before you move on to the next video, I suggest you do a couple of things. Go back and watch the other videos if you have not, and then pick 3 companies you're interested in. Research their fundamentals. Identify any upcoming catalysts. Choose an options expiration date that fits the timeline. Pick your favorite and prepare a short trade idea. Don't worry, I've made a downloadable worksheet to guide you through this process. Check the link in the description bar. Sign up for the Patreon group. You'll see all of the resources for the free community. In the next lesson, we'll walk through exactly how to choose the right option and how to manage your trade from entry to exit. Don't forget to like, comment, and subscribe, and I'll see you in the next video.